What's up, everybody? How's it going? Happy Wednesday. Welcome to this week's edition of the Hot Corner live strategy session. I'm your host, as always, Steve Straza, Director of Research at All Star Charts. Let's get this disclaimer out of the way so we can talk about some stocks and what's happening out here. Nothing we discuss here today constitutes any solicitation to buy or sell any securities. This is solely for informational purposes, not to be construed as investment advice. This is it. This is the same chart we've been looking at for a while here. Let me just pull up the chat quick so I can see if anybody's trying to talk to me here. Been talking about these tops. Is it a top? Is it a failed top? We got to wait and see, right? Go. Boom. Seems to me as though these are definitely failed tops. No. Last Friday, oh boy, I forgot to bring the chart along. Gene, can I rip up some live charting here? Is that okay? If I pull up TradingView? Let me okay, I'm gonna bring it up. So here we go. Friday's price action is something that we definitely need to talk about. This is the NASDAQ Cybersecurity Index. I'm going to zoom way in here. Okay. This is it. Courtesy of our friends over at TradingView. I have highlighted this candle from Friday. We're getting it there. Gene's working magic behind the scenes. The reason why I'm bringing this up is because every year, few years, really, the last time that this happened, for me, in my opinion, was at the lows from last year. So October 13th of last year, we were out here talking about it, tweeting about it. The candles, the bullish engulfing candles off of the lows after that CPI print, the October CPI report, were just crazy, right? And we had a similar situation here just last week on Friday. So here it is, highlighted in yellow. This is Friday's candle. Why did this stand out so much? A bullish engulfing candle is maybe the most bullish candlestick we have, right? There's hammers and marabuzos. The bullish engulfing is right there with them as one of the most bullish candles. All it takes to be a bullish engulfing is to engulf the real body range, right? So this would be the real body, not the spindle, right? The real bodies are the colored portions, blocks of these candles. If that is engulfed during the following or the subsequent trading day, counts as a bullish engulfing. What if 2 or 3 weeks of trading activity was engulfed? That's just crazy. We don't see that very often. So I think these candles will very much mark a tradable low. You see the same thing in Hack, right? The other cybersecurity index. Look at this candle from Friday, and then look at this follow through. 3 straight days of follow through. So to me, it's very clear that these tops have failed. We got these incredibly bullish candles right at these key levels. This is the internet index, right? Something similar. Monster candle, follow through. And we're figuring this out here today. We opened up pretty strong today. Now the bears are trying to take their shot. We'll see. Point is, regardless of what happens today, Gene, back to the slides. Regardless of what happens today, we already got the bullish candles. We already got the follow through. These tops are failing, right? Here's the S&P 500. We shook past the... We talked about these failed tops for the last 2 weeks now, right? NASDAQ, tech index, S&P 500, they all kind of look the same. We were asking the question, are these really tops, right? Because then that means a leg lower from here. Or are these failed tops? And we hook higher, put in some epic bull hooks or, bear traps, and then we're off to the races. And those bullish candles came in right at these key levels where we were asking ourselves this question, right? Like, are these valid topping patterns? We got the bullish engulfings, then we got the follow-throughs. All these key levels are being reclaimed, right? So in the case of the S&P 500, it's that 430 level. We shook a little bit past the August highs, shook down to the year-to-date VWAP, and now we're just rocketing right back through it. So next stop for me, 458, really 460. You want to round up, that's the summer highs. After that, all-time highs, 480. I think that's where this thing is headed. And I would not be at all surprised if we made new all-time highs or tested those old all-time highs before year end. Same thing in tech, right? Looks a lot like the S&P 500, only it already tested those old all-time highs, right? That's where the top began. Little shake here. Looked like we were completing this top, hooking higher now, right? This was a valid top, late 2021, early 2022, led to a massive drawdown. This is a failed top. Semiconductors, same thing. Valid top. Over here, 45% drawdown of the 2022 lows. Right back to the scene of the crime. This is not a top. This is a textbook failed top. I think we're getting that confirmation through this incredibly bullish follow through over the past few trading days. One that really stands out, I just tweeted this chart. I said, say hello to your new leaders. Communications. JC continues to point out these stocks were hit harder than anybody during the bear market 2021, 2022. Now they're rallying harder than anybody. In fact, it is almost impossible to outperform the NASDAQ 100 these days, right? You've heard of the Magnificent Seven. The top 10 stocks in the NASDAQ 100 make up 50% of the index. Those are your leaders. As long as that remains the case, it's literally just math. Very, very, very difficult to outperform that index right now. Communications is doing it. I think up about 44% year to date. NASDAQ just under 40%. Tech is not even outperforming the NASDAQ this year. Right? Communications is more than tripling the performance of the S&P 500 this year. We've talked about the stocks that are driving it, right? The ones exhibiting very impressive relative strength during the corrective action that began this summer. Google, Meta. I think they make up like 40% of communications still, right? So it's really the big boys. This chart doesn't look nearly as good on an equal weight basis, but the point is here, this really wasn't a top. This was a high and tight consolidation for communications, right? We could draw tech like a top here, right? That's the right way to draw this. I can't really, in good faith, draw a failed top on communications. This was just a high and tight little, call it a flag, short-term continuation pattern. And now we're back off to the races. So communications is definitely a place where we will continue to look for trade opportunities. Internet stocks are red hot. I want to see the laggards hold on here. I think that would be really big, right? And the one that we keep pointing to, which just gives us such great information time and time again, is the Russell Microcap Index. This is not the Russell Small Cap Index. It's not the Russell 2000s. Russell Microcaps, IWC. Key psychological level here. I zoomed all the way out to the 2019-2020 highs just before COVID, right about $100. And then just look, since last year, we just keep hitting this level time again. Keep testing it. I don't know why I have the red arrow drawn here. Sorry. But the point is, we are undercutting it, violating this 100 level, making fresh multi-year lows. I need to see this level reclaimed ASAP. Right? The worst stocks, the worst indexes, it's important that they hang on here, right? And don't resolve their ranges lower. Microcaps are going to give us some great information. Watch that 100 level. Ran up, tested it out here just this morning. And now, stocks are fading a little bit. It's 115 here. Another group I'm watching along the same lines of getting information from the laggards or getting information from the weakest stocks, the banks. I think we need to be very mindful of the fact that earnings season begins just in 2 days, right? The banks always kick off earnings season. 3 of the majors are going to come out and report on Friday. We just broke these VWAPs from the crisis lows, the banking crisis lows. These are the First Republic lows here in May, right? This VWAP has really guided price in its bounce or rebound off of those lows, violated just a few weeks ago, testing it from below, from underneath today, and so far we're failing. Again, with earnings coming out for these guys in 36 hours, not even, right? So I think the banks are very vulnerable here. I think we get 1 of 2 situations because we already know that the reports are going to be bad. Either they're bad reports and that creates some sort of flush or collapse lower. A lot of these charts, if you look at Bank of America, if you look at Citigroup, boy, are they set up to complete some nasty ranges here and see some big legs to the downside. Another thing I think could happen, you look at Bank of America, price action over the past few days, really bullish, a couple green candles, looking higher, back above, key potential support level. Maybe they just throw in the kitchen sink, right? Just all the bad news, move up those expense schedules, just throw it all out there, have a really bad quarter. Maybe the market's already priced it in because financials have been weak all summer, right? So maybe the market's already priced in some really ugly reports from the banks. Maybe this is a key low, right? That comes off of some really bad news. I love to see stocks bottom on bad news, right? So maybe we are walking into a situation like that. We're going to know a lot more Friday morning. For now, let's stick with what's working. I am very long AMD right now. This is just a vehicle that I'm using to play what I think is going to be a really nice automatic reaction off of those shakeout lows or failed breakdowns from last week or the week before. AMD 104, the base is complete. You see the 200-day moving average below price curling higher, indicating a new uptrend is underway. I could draw a little trend line here, right? A little trend channel that we're now kind of resolving higher from. Trading around 109 here today. I think AMD, listen, you can get long. You could trade it back to these highs from this summer, and that would be a pretty nice trade. Got in around 100, right? But I really think we're going back to those all-time highs. So 164 in AMD. This is a new trade. House of Representatives member Thomas Swoozy was the insider in this one. CrowdStrike, another new one. CRWD. I'm sorry, CrowdStrike was not a new one. I think we got in around 100 back in January, but now we're going to put out some new levels for it. We've already had 1 or 2 targets hit, but now this base is complete. Cybersecurity stocks are so strong. I was just showing you, using the cyber indexes as examples for the most bullish candles that we saw on Friday. These guys are emerging as new short-term leaders, right? So CrowdStrike, one of the strongest names in the group, call it 170, long against their first target, 220, second target right up near 300. Form 4 filer from January of this year, sizable purchase, almost $6 million. So again, against 170, and we think eventually back to those old all-time highs of 300. Vertex Inc., VERT, another new trade. Notice how these all look the same. Brian Lund was on this morning. He was saying, I want to buy things as they transition from stage 1, which is accumulation, to stage 2, which is markup, right? He's just saying the same thing that we say. We want to buy the completed basis. As soon as those reversal patterns complete, that's when we know we get a new leg high or a new uptrend. That's when we want to enter. That's exactly what this is here in Vertex. Really clean textbook reversal, right? Just completed. 23 is the level. Trading around 24 and change today. Price target of 40. This one's clean. The risk reward is fantastic here. I like this name a lot. 13G, we got a passive investor in the name with 12% stake. Tensile Capital Management. Fairmount Funds is in this one, another passive investment stake. This one just about 5%. Nuvalent, NUVL. I know this is coming up on Patrick's scans these days too, or the chart report. We've already hit one target in this one, 41. We got long. Target hit right around 62. Let it cool off. Let it breathe a little bit. Let it digest these massive gains from last week. And then we want to stay long. We want to see a little high and tight coil here, right around the 60 range, right? And then we go next stop 95. BWX Technologies. This is picks and axes play for nuclear, which I'm a big fan of, as most of you already know, right? Nuclear, uranium, you should all be involved by now. Pounding the table. These guys help set up and operate and maintain and service nuclear plants, right? They do some commercial, but mostly government. So you're not going to get as much beta here as you would in Cameco or in Energy Fuels, right? Or UEC. But I think it might be, if you're going to play it over longer time frames, you get a nice dividend, I think, here from BWXT. And you have a monster base. This chart just simply looks a lot better than the other ones, right? Already making new all-time highs. We're above 72. We like it. Long all day, target 95. It's a safer, probably more conservative way, I think, to play what is a monster secular trend in nuclear and uranium. Form 4 filer here, just from February of this year. This is Roper Technologies. This is an industrial, I believe. ROP is the ticker. A little, about $500,000 here almost from Richard Wallman. Look, it's a nice base, right? Coming off a solid uptrend off the COVID lows. Been basing here for over 2 years, almost 3 years. 500, if we're above there, target 590. I think you can also measure the base here because that target's not giving you too much. So if I were to measure the upper bounds of the base, 500, and the lower bounds, call it 350, measure that out about 150, I think 650 might be a more appropriate target for this one. We'll change it on the back end. So long above 500, ROP, target 650 based on a measured move of this massive multi-year base. Uber, one of my favorite names for the long term. I plan on holding this stock for a very long time. I really like this business. I really like this uptrend. This is one of the earlier bases to complete. We've been talking about it all year. Got the base breakout above 3650 here. Ran right to our first target. Oiling right there. This one's just getting ready for its next leg up. And that next leg is going to bring you those old all-time highs. I think we start including Uber in the conversation with these mega cap tech names, just like we used to include Netflix in it, right? But not really anymore. I think Uber, that's the future for Uber. It's gonna be in the same conversation as all these mega cap techs. I think this is gonna be a monster company that is around and successful for a very long time. So Uber right now, 47 is that level, right? Get long or stay long, target 64. DraftKings is really the same setup. It's a little more volatile, a little less clean, right? Because you need another 10% and change before we hit that target one. So 2150 was the breakout level in DraftKings, similar to Uber, ran right to that first target around 34 and change. Now I got a little coil here, a bit wider than the coil in Uber, right? It's a little more orderly, at least. 34, next level. If you want to jump it, you just buy the trend line break, right? The upper trend line here. You could jump that entry, right? Next target, 49.50. Big fan of DraftKings. Coinbase too. 80 has really been our level, really like 84. I think this one is just coiling up so tight here, getting ready to go. I think Bitcoin probably needs to cooperate, right? This is a much harder trade if Bitcoin isn't trending higher. So I would want to see that. But watching Coinbase, I do have like a longer term legacy type position in Coinbase at this point that I don't really overthink. If we break out above 84 here, I'd probably put on a shorter term trade and run this back to 115. C Limited, we were saying get long at 41, and a lot of us did, but you have another clean level here at 45, right? If you wanted to enter, like today, in something like this. Oops, sorry. Yeah, so clean level at 45, we're just about there right here today. 45 back to 56. I think that gap fills real quick. So it's a very short-term, very tactical trade. This one popped up unusual options activity. We're starting to include those names in these calls. I think it's the appropriate thing to do. PDD Holdings. This has been our favorite name in China for a long time now. Look at this beautiful base, right? If we're above 105, the base is complete. The reversal is in. A new uptrend is underway. This one's a double. This is a giant company. Over 100 billion market cap. It's huge. One of the biggest Chinese companies. Online retailer. Not at all familiar with what they do, but we get that base breakout right around 106. It's happening right here, right now, this week. So I think you could buy this one right here. Keep a tight little stop right around those pivot highs, 105, 106. Target 213, 100%. Not bad. Let me check the chat. Time limit on your price targets. Yeah, it tends to be 2 to 4 months. And for the longer ones, I'll typically say it, right? But you don't have to be a rocket scientist. If I'm coming out here saying, hey, we're looking for 100% in PDD, probably more like 3 to 6 months, right? When we write about these on the website, we always include a time frame. You know what? I've been quiet about the bull market shirts since coming back from Asia because it's been a corrective market for months now. We will bring them back. You're absolutely right. we will bring the bull market shirts back. We have so many. The closet is full with bull market shirts, just dying to get out there. So that'll happen. Thank you for reminding me. Josh Brown loves Uber too. I love Josh Brown. I've been on the compound. Go back. I was there with the guys in January. Problem is, I'm rarely in New York. JC does a lot of New York trips, so he goes to see those guys most of the time when he does. So I am rarely in New York. I was there over Christmas time. I was on the compound this January, and I had a blast. I love Josh. I love Mike. Is there an inverse relationship between gas, oil, and Uber? No, I wouldn't overthink that. Sure, it's an input cost. They probably hedge it. I don't know. It's really just it comes out in the labor cost, I think, right? As gas prices rise, they just pay their drivers more. Not sure. K-Web had a lot of unusual options. That's normal though. It's a popular vehicle. It's probably the best way to play China. It's got all the, biggest and best Chinese stocks. K-Web is like the NASDAQ for China, right? PDD is the heaviest weight. Yeah, know why? Because the price doesn't stop going up. JD and BABA used to be giant weightings, but those charts just can't stop falling. So PDD, the clear leader. I like the EdTech stocks. So TAL, TAL, EDU. I'm interested in VIP shops, VIPS. And I think, the bigger ones, the Tencent, the Baidu's, BABA, I think they are forming some really, really, really large bases that probably need, we're talking months to quarters to complete the basing action. But if and when those things go, I think they will act as quite the launch pads. So China for now, maybe focus on the leaders. I think you could use them as a bounce candidate if you're looking for a riskier counter trend move here. If you want to kind of pick the laggards as your vehicles to play this new leg higher, I think there's something there. But keep it tactical and then be patient for longer term trades from these Chinese stocks. I think that's coming, and we'll be talking about it probably next year, right? So you primarily look at daily, weekly charts. I get in there. I zoom in there. I use the Brian Shannon method. So I'll drill in 15-minute charts, and when I'm really entering and feeling kind of pumped up about something, I'll pull out the 1-minute charts. Sure. To enter trades, absolutely. I'll use like a 5-day moving average. I guess the point is though, when I'm picking a stock that I want to actually buy, it's the daily, almost always the daily. Then I'm drilling in to say, okay, where am I entering? What exactly are the tactical levels? What's the intraday VWAP look like? What does the week to date VWAP look like? Right? Then I'm really getting in and figuring it out. And sometimes I'll say, I like this even more. Sometimes it's like, I don't really like it. Right? But I'm always weekly, daily, and then I'm drilling all the way down to usually 15 minutes. I'll usually stop there. All right, copper chart crash. I don't know. I'm keeping a close eye on these metals. I think there might be something there. Again, there's a reason why when we come on here, I'm talking about almost all tech and growth stocks, though. I think we had one industrial mixed in today. Right? The strength, I think the market has been very, very clear to us over the past several weeks as it relates to who the leaders will be into year end. I think the market has made it overwhelmingly clear that it's going to be the same leaders as the first half of the year. Right? It's big cap tech. It's growth. It's communications, right? And that's all we got here today, guys. So thanks everybody for joining. As always, any questions, comments, concerns, want to say hi, info@allstarcharts.com. Other than that, everybody enjoy the rest of your week. Have a great weekend, and we'll see you right back here, same time, same place next week.